Assalamualaikum warahmatullahi wabarakatuh. My name is Salma Sufebrianti. I'm from class of 1H. My number is 21. And in this occasion, I will explain about bank reconciliation. The first one is the definition and the purpose. The definition of bank reconciliation is a report used to match and explain the balances in an entity's cash balance, a company's accounting ledger, and the bank statement balance. The purpose is used to compare your records to those of your bank to see if there are any differences between these two sets of records for your cash transaction. The second is terminology. The key terms to be aware of when dealing with a bank reconciliation are: the first is deposit interest, the second is outstanding check, and the last is not sufficient fund check. The explanation of deposit in transit is cash or check that have been received and recorded by an entity but which have not yet been recorded in a transaction of the bank where the entity deposits the fund. Then the explanation of outstanding check is a check payment that has been recorded by the issuing entity but which has not yet cleared its bank account as a deduction from cash. And the explanation of not sufficient fund check is a check that was not honored by the bank of the entity issuing the check on the grounds that the entity's bank account does not contain sufficient funds. The entity attempting to cash an NSF check may be charged a processing fee by its bank. The third is procedure. The first is enter the bank reconciliation software module, then check off in the bank reconciliation module all check, then check off in the bank reconciliation module all deposits. The fourth is enter as expenses all bank charges, and the last is enter the ending balances on the bank statement. The first is a listing of uncleared checks and uncleared deposit will appear. Then the check is that are listed on the bank statement as having cleared the bank. The third is the check that are listed on the bank statement as having cleared the bank. The fourth, expenses all bank charges appearing on the bank statement and which have not already been recorded in the company's records. Then the last is if the book and bank balances match, then pause all changes recorded in the bank reconciliation and close the module. If the balances do not match, then continue reviewing the bank reconciliation for additional reconciling items. The problem of bank reconciliation. The first is uncleared checks that continue to not be presented. Then checks clear the bank after having been voided. The third is deposited checks are returned, and the last that the dates covered by the bank statement have changed so that some items are included or excluded. This is the example of bank reconciliation. Write-ins has balance in a cash book of 1000 as on 31st December 2018. These are the other details. The first is 3 checks of 2,000, 1,500 and 2,500 were deposited in the bank on 3rd December 2018, but were recorded in a bank statement in January 2019. The second is check of 500 issued on 31st December 2018 was not presented for payment. The third is a dividend of 1,000 on stocks was credited in a bank account but not recorded in cash book. The next, direct deposit of 400 was made in bank account by customer which was not recorded in cash book. And the last is bank charts of 100 were entered only in bank cash book balance as per cash book on 31st December 2018 was 14 and 2000 rupiah. And then this is the solution of the example. I think that's all. Thank you for your attention, and I'm really sorry if I have many faults that I do the explaining the bank reconciliation. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.